The Toronto stock market could find lift this week as traders look to the U.S. Federal Reserve meeting to see if a disappointing read on employment will persuade the central bank to inject another round of stimulus. The Fed will take center stage as it makes its next interest rate announcement on Thursday. And while no one expects the Fed to raise rates, there are high hopes that it will announce further stimulus measures after the August non-farm payrolls report disappointed, with the economy creating 96,000 jobs. That was less than the modest 125,000 new positions that had been forecast. To make matters worse, fewer jobs were created than thought in June and July. Expectations for Fed action have grown since the release last month of the minutes of the last Fed meeting August 1st. At that time, several Fed members thought that the central bank could do more to help the recovery. While the minutes raised hopes for more action, analysts noted that there was a slew of economic data during August which seemed to indicate that the U.S. economy was improving steadily. But many feel that Friday's jobs data pretty much seals what the Fed will do this week. One avenue the Fed could pursue is a third round of quantitative easing. That involves the Fed printing more money to buy up government bonds, which further keeps the lid on interest rates and hopefully encourages more borrowing. The Toronto market ended last week with a solid gain in the week of the European Central Bank's announcement on Thursday that it would buy up government bonds in order to lower borrowing costs of some of the most vulnerable Eurozone countries. The TSX resource sectors particularly benefited from the ECB announcement. It raised hopes that greater financial stability in Europe will help the region get out of its economic slump, hopefully hike demand for oil and metals, and send share prices higher on the resource-intensive Toronto market. From the Canadian Press, I'm Malcolm Orson.